Crypto is entering one of the biggest regulatory transitions we've ever seen. And if you don't pay attention now, you may pay more taxes later or lose access to your favorite exchanges overnight. Between the new IRS rules in the US, the full enforcement of MiCA in Europe, and Brazil's licensing requirements, 2026 is the first year where global regulators all move at the same time. Let's break down what's changing and what you need to be ready for. Starting with the United States, the IRS has finalized new reporting rules that will reshape how every American interacts with crypto. Beginning in January 2025, US exchanges must report every sale or trade you make on a new form called 1099-DA, and then starting in January 2026, those forms will also include your cost basis, meaning the IRS will know exactly how much profit you made. There is no more "maybe they won't notice." If you sell crypto, the IRS sees it, but the bigger trap is this. If you do not update your tax forms, your W-9 if you're a US person or a W-8 if you're not, the IRS can force something called backup withholding. That means up to 24% of your crypto sale can be automatically taken out and sent to the government. So the simple lesson is make sure your exchange has your correct tax forms and start keeping clean records of every buy and sell. Now let's move to Europe because MiCA changes everything. MiCA is the new rule book for all crypto in the EU, and it becomes fully enforced by the end of 2025 and early 2026. Exchanges must be licensed, wallet providers must meet strict compliance rules, stablecoins must be fully backed and audited, and regulators are already suspending licenses for platforms that don't meet the standards. You'll see more exchanges leaving Europe, some features disappearing, and much more KYC. So the key thing to check is simple. Is your exchange MiCA licensed? If it isn't, it may shut down or block European users without warning. Brazil is also entering a new phase. Starting February 2026, the Brazilian central bank will require every crypto business in the country to be officially licensed. If a platform isn't licensed by then, it cannot operate legally. So just like in Europe, Brazilians need to make sure they're using regulated and approved platforms before that deadline arrives. More transparency, more reporting, more KYC, and more pressure on centralized platforms. This is not necessarily good or bad, but it is unavoidable. So here's what you need to pay attention to before 2026. First, keep clean records of all your transactions, dates, amounts, and values in your local currency. If you ever get a tax report from an exchange that doesn't match your own records, you want to be able to fix it. Second, use licensed platforms. Whether you're in the US, Europe, or Brazil, the days of using random offshore exchanges are ending. If your platform isn't compliant, you might get locked out or lose access when you need it most. Third, update your tax forms. This one step can prevent unnecessary withholding or penalties in the US. And finally, understand the real message behind all this. Regulators are tightening control, not to stop crypto, but to tax it, to supervise it like the traditional financial system. For everyday people, this means crypto becomes easier to regulate, but also easier to freeze, trace, and restrict. So stay informed, stay compliant, make sure you're not caught off guard in 2026 because the rules are changing fast and they apply to everyone. And of course, do not forget to stay curious and stay hodling.